Hi, let's shift our mindset today. Welcome back. This is another episode of the Rags to Riches $500 5-year challenge, and let's just dig right into it because I don't want to delay too much here. So today I traded SASI, S-A-S-I. I had my weekly market up and live trading live stream in the premium section of our Discord, and we traded this one 5 times. So the breakdown of the finances here, and this is kind of just, I'm going to do a really quick recap here. So based on my contributions for the month, right? Remember we put in $500 in September, $500 in October, and then an additional $200 from the side funds from a garage sale. So any kind of side hustle or extra funds you can always throw into your portfolio. Just helps speed things up a little bit. But that was just the one time I want to do that. I don't want to keep doing that because I know that's not necessarily attainable for everyone. So I just wanted to do it once just to demonstrate the kind of impact it can have. So starting with $1,200, we know that 70% of that will be for dividends or passive income, right, if I can spell, and then 30% for speculation. So today I was trading just with a speculative amount. Now I did get a $4.04 dividend payout from Tesly, TSLY. It's the monthly one. So that is also added into the mix, but as you can see here, the portfolio amount is $12.70 and 89 cents, obviously. But that's $70 above our contribution. So this portfolio has a net positive so far of $70, right? And that might not seem like a lot, and it's really not in the grand scheme of things, but the percentage relationship between $70 and a $1,200 account can get pretty significant once it starts to compound. So that's why we're here. So either way, I'm going to base my speculative amount as a maximum of 30% of this amount right here. Okay. So if I take my little calculator and I pull it out, 1,200 times 0.3 gives me $360 to speculatively trade with. Okay. To trade with. And I want to use 33% of that, or 1/3 per day, because I'm on a cash account and I want to roll those settled funds. 33% per day equals $120 maximum, okay? Which you may realize this is 10% of the portfolio. So really what we've done is we've taken our portfolio and we've carved it up into blocks of 10%, okay? 7 of those are going to be dedicated to dividend and passive income positions. 3 of those 10 blocks of 10% are going to be dedicated for day trades, okay? Or swings or whatever else I feel like doing. Now, one of the members of my team here asked if he can do swing trades and stuff, and absolutely. You don't have to do day trades, especially if you don't want to deal with a cash account or you don't want to be glued to your monitor. You can always just do swings. We still don't recommend using any more than 10% of your portfolio for any position, though. So if that is the case and you're trying to speculate with that kind of amount, I would just recommend maybe keeping it relatively small, just to keep yourself safe and make sure that one trade doesn't go against you and ruin your account, or maybe drag your emotions with it and stuff like that. So if I'm using 33% of this per day, $120, and then I divide that by 5 trades per day, okay, that gives me a maximum trade amount of $24 per trade, okay? So that means I can get one $24 share. I could do 6 $4 shares. I could do 2 $12 shares, or 12 $2 shares, or any combination of this up to a max buy limit of $24, okay, per trade. And since we have that rule in place now, I can go ahead and go into my hotkeys, or I'm sorry, my trades. I can go to my settings, and I can ensure that I set the max quantity, the default quantity for the buy orders that I set up on my hotkey is $24. That way I don't have to think, I don't have to do any math in the moment. I can just hit Control-1, and it will automatically buy $24 worth at market price for me. Now, this won't work outside market hours, obviously, so that part you still have to kind of do by hand, but you can set up a limit order and still set that max $24. You just have to make sure that you understand it's a floor of shares. It's not a ceiling. Okay, so if the share is $23.98 and you're putting a limit order in for $24, you'll get 1 share, but if it's $24.01, you're not going to get filled. Okay, that's just common sense. What that also means is that when I place my orders, I can set it up so that it automatically sets a bracket to take profit and stop loss at given distances away from my price. Now, I didn't set that up on these particular orders, but I could, right? And that's just another tool that we can put in place so that we don't have to make decisions, all right? So that's pretty cool, right? The more we can automate, the easier it becomes to trade like an algo. All right, and that's less of the human element in the mix. So with all this in mind, okay, I knew that I had 5 trades to take. Okay, the first one netted me a result of $1.99. It wasn't a great big move. It was over here. It was pre-market. I think it was like here to here or something. It really wasn't that bad. And then the next one, I think I lost $1.67 or 66, I think, because of the way I got filled. And that's okay. That tends to happen. It was, I think, within the first like 10 minutes of the market. So that's okay. So overall, it was still up 33 cents. Okay. Then I placed my third buy. I think I got a high fill somewhere around here. With the intent to potentially average down if I had to. So I had a strategy here to trade this retracement off this impulse. So if I kick it up to the 5-minute, you can see it better. And that's exactly what we got. We got the impulse, we got the retrace right here. This blue box was exactly the level that I was watching. And I plotted this pretty close to market open with a $5 floor. Okay. And it came down and touched that to the cent, which was pretty cool. I got to show off a little bit, but it, it just happens to be that way. But then I was really looking for a confirmation off of this $5 level, and we got that. I got a nice, beautiful little engulf here on the 2-minute chart. So I was able to average down on that. Or I'm sorry, I think it was the 1 minute I used for that. Yeah, it was right here. This guy right here. These 2 candles, beautiful little engulf. That right there was the setup. Placed the buy, averaged down, and then when the price went back up to my break even and above it, I went ahead and reduced my position size, and I did that twice. Okay, so my average started at $7.19, I think it was. We got it down to about $5.58 just by doing that twice, and that's a $1.68 difference, which is about 22%. So I reduced my cost basis by 22%, and I walked away with an extra, I think like 36 cents worth of profit just from selling just above my break even on those shares. So that was pretty good. And then I just had my last buy that kind of puttered out. It didn't really go anywhere, and I ended up just selling it around that 558 mark. I think it was right above it, slightly after hours. I think it was around here somewhere. So not a spectacular trade, but I was really looking for a break over $7. So I did get a little bit greedy here. I didn't sell up here, but that's okay. I wasn't really looking for a shorter term trade. I was looking for a good clean run over the $8 level. And we kind of stopped right at $8. So it's just the way it works. But most importantly, I had a plan. I managed my position. And I didn't get hung up on every single candle that I was looking at, because that would have drove me crazy. Because look at this chop, right? Big red candles, big green candles. This will drive you insane. So you need to be careful if you see stuff like this, unless you're specifically hunting these really tiny engulfing candles and you can nail them time and time again, which I usually do. But I was on a live stream and talking, and I really didn't have a lot of time to focus on the actual charts. And I just don't feel like being a slave to the market. If you can't do that, or if maybe something is moving too fast, especially if you're trading these top gainers or SPY, you got to kick up those time frames. Go up to the 5-minute, go to the 15-minute, 30-minute, 1 hour if you have to. So like the 15-minute on this is beautiful. It's nice and clean, easy to read. You get these tiny little engulfs right here. That's a perfect one. Another perfect one right here. Another really good one right here. Right? So plenty of opportunities. We don't have to just trade on the 1 minute. And what I wanted to talk about in this episode specifically pertains to what to do with the profits and how to view them. Because this is what leads to a lot of impulse and a lot of FOMO, greed, compromise, things like that. So I mentioned earlier that I got a $4.04 profit from dividends through Tesla, TSLY. That is not going to go into my speculative amount. Okay, so if I pull this back up here, no matter what happens on this account for the month of October, I'm not going to trade more than $120 per day, ever. Okay, and if I start to lose, consecutively, and that $360 to trade with drops down, I'm still only going to use 33% of it per day. So if I lose $60, say I trade Apple, all right, and it falls off, and I lose $60. Okay, I get that $60 back at tax time as long as I don't re-enter Apple, so that's cool. But that means that I have $300 left to trade with for speculative trades, and that brings my daily trade amount down to $100. I'm not going to dip into the 70% just to compensate. All right, so this takes priority over the speculative stuff. Okay, so it's almost like having 2 separate accounts. And you might look at this and say, "Oh, Pookie, it's only $1.36. You suck." I do agree. That's a very, very small profit for what we're used to. But if you think about it, okay, if you're trading a stock that gives you a 30-cent dividend every month, even maybe it's a pretty aggressive one, you get 30 cents a month. That's 5 months worth, or I'm sorry, 4.5, maybe 5 months worth of dividends that you've added on early. So you've been able to reach out into the future, grab those dividends, all 5 payments or whatever, 4.5, whatever, and add them to your portfolio. And you're not retouching that amount. That's awesome. You didn't have to take crazy risks to get it. You're just still enjoying the speculative side of trading like we do. And you've just sped up months worth of dividends where you would normally have to wait. That's 150 days. And you've knocked it out in a couple of trades. So it's not always about getting big runners, okay? And that's the equivalent of having bought 5 more shares and collecting 1 month worth of dividend for that. So it's not to be, a coward or anything like that. I know there's a lot of ego behind trading and stuff like that in a lot of communities. But if you consider it, right? We put $24 in, we got a decent profit back for it. It's not really huge, but again, $1.36 in exchange for, how many 30-cent dividend payouts would that be? That's a much healthier way to look at those smaller profits. And I didn't have to touch options. I didn't have to do anything crazy. This is a pretty choppy chart, but I didn't have to do anything crazy here. This was just kind of going as I was working in the background. I had my limits set. I was good to go. So we can easily just tweak out and trade SPX or SPY all day long. But where's the value in that, right? I already traded this month and we're up $70. It doesn't have to always be crazy trades and crazy profits. I'm perfectly okay taking $1.36 profit on a Friday on this kind of account because A, I can view that as extra dividend payments paid in advance, and B, I didn't lose anything. I'm net positive for the day, and that's my goal every single day. If I lose, my goal is to make that loss as small as possible for the day. And I know I can get it back at tax time, so I'm not too worried about that. If I'm above ground on the day, I did good. Okay. If I'm below and I'm red for the day, but I followed my plan 100% to the T, that's a good day. And those days will be washed away by the next good day that comes along. All right. So yes, this was a relatively slow, small profit, and that's okay. Most of the time these things either fall off hard or bounce really hard. This one just kind of hung out, and that's okay, right? It demonstrates that we had net positivity just by following a plan. I was able to reduce a pretty high fill. I executed it at market, and then I dropped it down $1.68. That's insane. I cut 1/5 of that price off. So I lowered my average really far. And then, of course, I just didn't sell at $7 like I should have. But that's my own personal fault. I was distracted and didn't see it run up and all that good stuff. But can't change the past. So another way that you can look at profits is, especially if you're trading options and you get maybe, I don't know, $50 or $100 in profits. Okay, maybe you double your contract price. Rather than putting that money right back into the market and adding this to your speculative amount, why not just keep your speculative amount the same and add it into dividends? Like Snowflake, for example, every time he looks at his profits as he's in the trade, he views it as shares of forward that he's able to lock in. So that way it keeps the FOMO at bay, and it keeps the stop losses move up because he's got defined levels that he can use based on whatever the price of forward is. And he understands that he can take those profits and just convert them into shares. So it's really, really cool when you change your mindset. And that's something that I think a lot of people need to be introduced to first off, because you don't know what you don't know. And that's it's really hard to adopt that kind of mindset if you don't have it broken down for you. And it's also really hard to get away from the ego in trading. And that's what hurts a lot of people. So again, if you think $1.36 isn't good, just don't trade speculative. I was on the 1 minute, 2 minute, a lot of chop, and it went sideways, and that's okay. Yesterday, I think I made like $32, okay, which is pretty significant for this size account. So it comes and goes, right? It just depends on what you're trading and how it behaves. The most important part here is that I traded with consistency and I followed my plan. That's where I'm going to get confidence. It's not about just happening to be in the right ones at the right time all the time. So with that said, I'm going to go ahead and end this recording here. pretty soon, but I just wanted to point that out, and I have to go to dinner right now. I'm going to get yelled at. But yeah, I just wanted to point that out. It doesn't have to be super complicated. You can just kick down to the 2-minute if you want to and just grab bullish engulfings. I think it's what I did this morning. I think on the two little runners here, I think it was this guy. RSI was over 50, and this is, again, it doesn't matter what strategy you guys use. I did this to demonstrate. I don't remember exactly which candle it was, but it was one of these. RSI was over 50, MA had a positive slope, and the candle was above the MA. That's as hard as it has to be. Or you can use something like Stocks Buddy. Stocks Buddy nailed this. If I look at it was the 5-minute on beginner. Let me just go ahead and plug that back in. Maybe it was intermediate. I don't remember. Anyway, absolutely crushed it on these top gainers. It's just trend strength and trend direction. Yeah, I think it was this right here. That little dip right there that I got right at that $5. Stocks Buddy confirmed that for me, so I didn't really have to think. I was already watching the area, and it just boop, and then I bought, and that was it. And then it was up to me to reduce my position above my break even. The Stocks Buddy isn't going to do everything for me. I still have to have a plan, but it does make it super easy, especially if you're struggling with confirmations or anything like that. Mostly by telling you when not to trade. A couple of people, maybe from back in the day, remember we used to add down and build our positions down, and that's kind of what I did. I just reduced it at break even every time. And a lot of people got hurt by that because they weren't necessarily waiting for proper confirmations before they place their buys. And that, obviously if you add too much too soon, you lose your leverage over that average, and it's really difficult to get that position back. But just waiting for a proper confirmation off of a level of value and then placing that buy drags your average down so much farther. And as long as you can be patient and identify those levels and wait for those confirmations, that is a perfectly viable strategy. So I am doing a little bit of both on this account, but I only justified that because it was in the retracement, and that was the level there for that retracement. If it was just a different setup or if it was a descending channel, I wouldn't have. So it really just, you have to understand the neighborhood you're in and trade it accordingly. Okay, so this is obviously a triple-digit runner pre-market. It was very risky. A lot of noise in the chart on these low levels, and that's when I just kick it up to the higher time frame and don't stress. Right? I knew the overall setup here was this impulse retracement. We got the retracement with a nice bounce, and I failed to take profit up here. But that's okay. I walk away with a profit for the day. That's all I really care about. So as far as the other positions here, I am probably going to take some of this profit here because I have $70 worth of profits. I'm probably going to go ahead and grab a share of O before I leave for the day. I'm not a big fan of that stock, but it does pay good dividends, and it's nice and efficient for me, and it's cheap. So the choice is to either buy 3 more shares of Tesla or 1 share of O, and I don't want to overload too hard into Tesla just yet. So we'll see. I'll think about it for a little bit more, and I'll update you guys on the next episode. But till next time, enjoy your weekend, have fun, and I'll see you next week.